Picture a single dollar doubling every year for 30 years straight. Most people guess it becomes a few $1,000s. The real answer is over 500 million. That is not a trick, that is math, and almost nobody around you understands it well enough to use it. Right now, somewhere out there, a 19-year-old with no degree and no family money is quietly building a portfolio that will make him financially free before he turns 30. Meanwhile, you're stuck with a paycheck that disappears before the month ends and a quiet feeling that this whole system was built for someone else to win. You did not miss some secret class on money. Nobody taught it. That is the real problem, and today that changes. Most people carry 3 silent beliefs about money. Investing is gambling for the already rich. You need a lot of cash to start. The whole game is rigged anyway. None of these are true. A study of self-made millionaires found most never earned a 6-figure salary. They were teachers, mechanics, everyday workers. What they shared was not income, it was one habit, paying their future self first. But this is where things get interesting. The real engine behind wealth is compounding, your money earning returns, and those returns earning their own returns. In the early years, the growth looks embarrassingly small, and this is exactly where most people quit. But compounding is not a straight line, it is a hockey stick. The biggest gains come late, which means the real mistake is not picking the wrong investment, it is stopping too early. Picture to 25-year-olds. One invests $200 a month for 10 years, then stops completely and lets it sit untouched. The other waits 10 years, then invests the same $200 a month all the way to retirement. Even though the second person puts in far more money overall, the first one ends up with more. The only difference was time. You do not need a big income to build wealth. You need a head start, and the second best time to get one is today. If compounding is the engine, consistency is the fuel. Over any 20-year stretch, markets have always trended upward, yet most investors still underperform the market itself. Not because of bad luck, but because of behavior. People panic sell when prices fall, then buy back and once prices have already recovered. The market rewards patience and punishes fear. Warren Buffett has said his favorite holding period is forever, and that single idea separates the wealthy from the anxious. The final piece is where you put your money, something school never teaches. Wealth is not one lucky stock, it is spreading your money so no single failure sinks you, while still letting compounding do its work. Index funds, which simply track the overall market, have quietly beaten most professional fund managers over time. It is one of the most proven facts in finance, and almost nobody is taught it. None of this needs genius or existing wealth. It needs starting before you feel ready, protecting your money from your own panic, and giving it time. The people you envy for financial freedom rarely made one brilliant move. They made one boring decision and repeated it for years. There is a long stretch where nothing seems to happen. That is not proof it is failing, it is proof it is working. The only question is whether you will still be standing there when the curve finally bends upward.